Good morning. Welcome to the Phoenix Blue Update for Monday the 13th of March, presented this morning by Tom Colley. Big week ahead for us this week as traders. We've got the FOMC rate meeting on Tuesday/Wednesday, with the announcement and press conference on Wednesday evening UK time. We are the markets, and we're anticipating a rate hike of 0.25%. We'll go on to that when we look at the news in more detail. But early part of the week means it will probably be relatively quiet, but also it's another week, I'm afraid, for caution. We do also have the central banks from Japan, Switzerland and the UK with their rate announcements almost immediately following the FOMC, so it will be a busy week, and a week where we really want the majority of it to play out before we see our high opportunity or high probability opportunities arise. Okay, so the news itself. This afternoon we have a speech at the opening of an event from ECB President Mario Draghi. Worth keeping an eye on that, particularly if you're obviously trading the euro. And then overnight we have industrial production out of China, which is obviously significant. Going on to the later on in the week itself, it's Wednesday, 6 p.m. UK time and 6:30 p.m. UK time for the press conference. We've got the Fed funds rate announcement, as you can see here in December. Rates rose from 0.5% to 0.75%. We're now anticipating, or the market's forecasting, a rise to 100%. The bond markets have that priced in 100%. So the markets are effectively certain that that's going to happen. I'm with them 95% of the way there. I think there may be still a small chance, if we got some disastrous inflation figures out on this Wednesday, that it may just temper that. Unlikely, but it's on my radar. Okay, it's also one of the events where we get the FOMC economic projections, which will also be significant in how the Fed see the economy moving through the latter part of the year or through the remainder of the year. And we will be looking to Janet Yellen for some forward guidance, maybe on the next steps in terms of further rate rises. Right, the dollar index in front of us here on Friday. Although we had good non-farm payroll numbers, we saw the dollar sell off. I'm sure this is dictated by two factors. One is the forthcoming rate statement that we've already mentioned, but also we had an ECB rate statement and press conference last week which had a hawkish tone. It wasn't talking about rate rises, but specifically talked about a lack of any imminent need for further action to reduce rates or increase levels of QE. We also have seen moves in the French presidential election, which have also proven bullish for the euro. And as we know, the dollar index does have a weighting of nearly 58% in terms of the euro, so is more dominated by the euro. That's not to say that we didn't see dollar weakness across virtually all the markets on Friday after NFP. Over on the yen, as we can see, we tested 102 and rejected 102 through NFP on Friday. Everything's already looking that the dollar's pulling back further so far this early point of the morning. So key level will remain 102 for post the FOMC. We'll be obviously looking for a close above and a pullback in the normal style. Key level to the downside is this 113.50, which offers nice support through there. Any break of that, and we are going to see a more of a downside picture ongoing to the dollar. Certainly if the rate rise wasn't to occur, then we will clearly see all markets selling off the dollar. And the question will be is how far will that sell-off go, because that will be a proper shock to the market too, as who I've said in terms of the bond markets have the rise written in 100%. Over on the euro, as you can see, we had the ECB on Thursday. We had a really bullish day through Friday because of the after effects of that, the French elections, and we're already bullish overnight into the early part of this morning. These slides were taken about 6:30 this morning, so quite possibly more bullish than this, and we do have the potential here for movements up to certainly up to this higher level here around the 108.20s through here, which would also constitute the neckline of the head and shoulders that we, to be fair, we thought we may have passed through, but it's now still in our sights. Any shall we say disappointment by the Fed is undoubtedly going to cause a break of that, and then our bias medium turn on the euro will reverse as we look for this head and shoulders to play out with a target to this spike here about 1.13. This spike was the overnight spike of the US election and the surprise at that time election of Trump. Over on the pound, well, plenty of downside on the pound over the last 2 weeks. We have started the day with a bullish move here. Possibility for Article 50 being enacted as early as Tuesday this week by the government, being the start of the process to take the the UK out of the EU. That process has a 2-year time scale as a maximum. Interestingly, the first item potentially on the agenda will be how much the UK will actually have to pay to terminate its participation in the EU. The EU are currently saying, there's substantial sums to be paid because of existing involvement in existing programs, things like pensions for EC or EU staff and pension payments there. So there have been figures bandied around between 40, 60, 80 billion. I would suggest anything that comes out of an early negotiation that involved that type of number is going to be negative for the pound. We're also starting to see a drop off in data on the pound, so our bias is downside to the pound, and we'll be watching for levels certainly in the latter part of the week to sell this. We're not looking to buy the pound still at this stage. So any opportunities intraday or end of day that give us a selling opportunity, we'll be looking to take there. The other is a market that we've done quite nicely with. We got in right at the top here. We've come down to this level about 0.75. We've had money off. Our stops currently at this level through here, looking at this resistance, which I know is currently being tested as I speak. So if we get a breakthrough there, that will take that trade out for us. We're well in profit. You could say that potentially we should have seen that as a target down there, and we did at one stage have that as a target. But through the movements last week being so aggressive, we did move our targets further south. So we may actually get taken out there, still well into profit, and we'll be looking for opportunities to get back into this market. We've got another level through here that you can see I've got intraday ordering already. Again, looking to take that. We'll be looking to take money off the table quickly, get the stop to break even quickly, and look for that to play out to the downside. So as an intraday entry, we will be using it to potentially take trades to the downside, not closing it all at the end of the day, but it will be at no risk over the end of the day. Okay, over on Kiwi, again, extremely bearish this market's been. We saw a pullback through Friday, and that's been followed out today. We've got this level through here about 69.50, which we see is key in confluence with this nice trend line through here. Price is so close now that we will be looking for price action at that level. And there's another intraday level above that I've got an intraday order to do exactly the same with, potentially, as with the Aussie. But that 69.50 is the key level. If we can see a change of cyclicity on a lower time frame or end of day price action, and we will look to take that trade back down to the downside, and would look to this week to get our money off the table as soon as possible. If we have the opportunity before those lows to have our stop at break even, that would be good. But certainly by the lows through here, we'd want to have some money off the table, our stops at break even. Gold, we're already short silver. We're looking for opportunities to add into that trade. Clear opportunity in gold here at about 1,220, just below that 1,218. Nice level on the longer term through there. We will be looking, bearing in mind the FOMC this week, we will be looking for a price action entry there as opposed to a limit order. We did have a limit order placed there the latter part of last week, but we are being much more cautious this week, and I'll look to trade that back down to the downside, assuming that were to happen. Okay guys, so the story really is FOMC this week. There are further central bank announcements through the week. They certainly will have an opportunity to some extent react to the Fed decision, but I would see most of them or them sitting on the fence, not doing anything and waiting to see how the Fed action plays out between now and their next meeting. Quick reminder, really is the last opportunity now, Wednesday this week, on the 15th of March, and we have our monthly free trading event. If you're new to Phoenix Blue, all you need to do is click the link which will appear here shortly to the website. Contact us, tell us you want to be on the event to get the opportunity to trade alongside the Phoenix Blue fund managers for the afternoon. Ask as many questions, talk to existing Phoenix Blue clients about how the methods that we use, the analysis, the commitment of traders analysis has moved their trading on from when they joined. Also opportunities will appear on here to you to subscribe to the YouTube trading channel, and also to have a look at previous morning updates if that's of interest. Okay guys, so FOMC going to dominate this week. Real caution, we're seeing that pullback in the dollar. That may end up being beneficial to us because if the market has pulled back, it gives more possibility for the movement to the long side on the dollar. If we continue to go strong, we were certainly at risk of buying the rumour, selling the news scenario, whereby we'd be seeing pullbacks on the release of the rate announcement. Okay guys, that's it for today. Have a great week's trading, and we'll speak to you in the morning. Take care.